Hello, hello, hello. Happy non-farm payrolls Friday. How is everyone doing? Good morning, Patrick. Isn't there a huge options expiration today? There's the weeklies, but other than that, no. Good morning, Jacob. Good morning, everyone. Good morning, people in the background. Chime in the chat. We had non-farm payrolls where the market was pulling back after Apple's earnings. I wouldn't be surprised if Apple bounces back because it's still buy everything. It's buy everything. It's Coco mode. It's Coco mode. Your face is being ripped off. Why? How's your face being ripped off? Uh, you shouldn't be shorting into this thing yet. There are no short setups yet. There's no crying in baseball. Let's see. We had the non-farm payroll number come out, and the market celebrating that it was the come in much lower than expected, except for government payrolls. Yay, more government! Yay. Hourly earnings coming in less than expected. Participation rate a little less than expected. Manufacturing payrolls, big drop there. Private payrolls coming in, a big drop there, and September and October revised lower by over 100K. Also, what was it? What was it? The birth death model, their makeup numbers that they adjust things by, added 412K jobs. So this number, if you take that out, was a disaster. But everybody thinking the Fed, we're rallying because the Fed's going to have to cut. They're not actually not going to hike. They're going to have to cut, as you see here. The Fed Watch tool already now has the first potential cut in coming down from June to May. So, let's see if we get daily cycles getting to the top, and we've had a pretty strong run. Would not be surprised to see some profit taking at some point today, and at least a pause at some point before the potential next push higher in the markets. We have the S&P services and composite numbers coming out at 845. Those are the small to medium companies, and the ISM numbers, the large companies, services numbers come out at 9 a.m. Central, so do not ignore those. Keep paying attention to the prices and employment components of those, though, of the ISM numbers. Would not ignore those numbers. And we got Barr speaking this afternoon. By the way, Monday's really quiet. So let's see who else is here. Oh, face. Yeah, but it shouldn't have ripped off your face. We were prepared for a rally, Christoph. Work's getting in the way of your trading, Sterling. Come on. Good morning, options 22. Oh, so where do we sit? If you look behind the scenes, even though Apple was a beat yesterday, the rest of the world, especially China, was a disaster, and the rest of the world numbers were not good. The U.S. sort of bailed it out. But Apple down 2%. I'm watching at least for a partial gap fill in that. You have all the other mega caps up. You have all the chips up. Chevron down. But other than that, you don't have much down, at least pre-market groups. Let's do a quick refresh of this. Everything up now except technology is down 0.7, but nothing much. So that'll probably pop positive, and that's because of Apple. We already looked at Fed Watch Fear and Greed mode, still in fear but climbing. Still going to be watching for this to get out of fear mode at least. So in terms of earnings today, I already mentioned Apple's earnings yesterday. I still expect people to rush in and buy it, though. This morning, Fubo, CBOE, not much today going on, so we'll close out the week on earnings. Now, on the next little area higher, the next major swing higher, we closed above the 62.5. We've just hit that 75 area. just above the 50, the flat 50. So I'm going to be watching for some selling pressure to come in, daily cycles getting the top, and in short term getting overbought. Does that mean there's a short setup? No. There is not a short setup. There was a nice sideways ledge coming up and a breakout from that with the non-farm payrolls. So the key support area is about 43.35, then about 43.35, 44.40, and then 43.25 on any pullback. What's interesting, and unless we get something really negative come out today or some really negative tick, I would not expect that level to be broken. If it was, 43.19 would be the next key area. So to the upside, we're also against, by the way, we're also against the breakdown zones. So see a little area that formed this mini reversal pattern. We are against the breakdown zone from that prior. So there's a fair amount of resistance up here. So I'm going to be watching, and now we don't have to have a major pullback. Remember, with daily cycles at the top and weekly cycles still moving up, all right? And this looks like it's going to be a percent B by week. A percent B by week. If we look at the weekly pattern, we could easily come up to 44.35, even 4,500 again over the next couple weeks going into Thanksgiving. Now, why I brought that up is because we could see a pause. Remember, a correction does not have to be a pullback. It could be more of a sideways correction. Keep that in mind too going into the next few days. So from long stuff earlier, like the percent B buy signal that triggered on Monday, this would be in trailing mode. But because we still have weekly cycles going up, from my perspective, it would be give it a little more room for trailing mode, because it could pause, pull back a bit, more of a sideways correction, and then resume the next push higher. I doubt this will be a single leg push. Now watch, something will happen and it'll collapse back down. But this is not normally going to be a single push higher move. We finished the A, B, C, D, E pattern on the Elliott wave. We're now going into, and this might be another corrective pattern, not impulsive. So we could go into an A, B pause / minor pullback, and then a C push higher. That could actually set up a higher time frame topping pattern. So that's just my thoughts on it. Good morning, PMG. Going to start trading the mini NASDAQ overnight holds, so you have an opinion on best time frame. Well, if you're doing overnight hold, I mean, I'd focus on the 4 hours. The 4 hours, especially for overnight holds. That is, and I have no problem trading the minis overnight. I mean the micros. Sorry, not the minis, the micros, which is what you brought up. If I said mini, I meant micro. The micros are a very good way because you can make your position size relatively small, and you can take advantage of a lot of the European stronger opens. Now, there's a strategy for, even it ran over into COVID times, but after the big drop in COVID, where you essentially you buy the U.S. close, you buy the futures close. I shouldn't say the U.S. close. You buy actually the futures close, and then you sell the futures open, and that you are capturing most of the upward gains because of the European bounce back pattern. Now, is that as strong right now? Not as strong, but it's something to consider. So again, not trading advice, research it for yourself. But that was a strategy for a few years. That was a very strong strategy, and a lot of people, even with smaller accounts, could do it with the micros. Because, yes, it's not every day, but overall, most of the gains were coming from the European Open into the U.S. Open. So, NASDAQ, yesterday closing above the 62.5, so we should see a continued push even after a pause in the NASDAQ. Daily cycles getting to the top, getting to overbought. So again, same thing from my perspective, trailing mode. The next minor targets are 15,127, then 15,3. And then we're going to ratchet this all the way up to the prior ones. And the key level we'll be watching on a closing basis is 15,341. We're not there yet because the cycle's still trying to turn up on the NASDAQ. And this also looks, if this closes above last week's high, like a percent B buy on a weekly. In terms of today, so first level support, 15K. Then you're looking at 14,930. For the Dow, it closed above the 62.5 on the most recent swing yesterday, but then followed through and immediately hit that 87.5 already. At this point, I'm going all the way back. The next key area on the Dow, besides retesting this high area from October 17th, it was about 34.3, 34,557. Now, once we enter 34,129 to 34,557, anywhere in here we could get the pause or the potential rollover with cycles at the top and overbought. So I'm paying close attention to this area. Again, it doesn't have to be a big pullback. It could be more of a sideways. What word am I looking for? Very shallow channeling sideways pullback. Would not be surprised to see that. Now, is that guaranteed? No. We don't know what kind of pause or pullback we'll get there, but that's why I'm giving anything a little more room. I would give it a little more room if from a trailing perspective. Russell closing right at the 50% today. Going to see if it closes above 1741. The Russell is in full-blown party mode. Does this change anything with the bearish pattern? No. The Russell back to another key breakdown area, back to the weekly rotation zone. Could the rally continue? Yes. Would I expect to see a pause up here and possibly another pullback? And I'd expect the Russell possibly to pull back a little more than the other ones. But this is very key for the Russell, a very key area to watch on the closing basis, 1741. What am I doing? On the support basis, the Russell says this is full-blown party mode with those unemployment numbers. Next key area is 1761.7, then 1782.2. The support, the support level's all the way back here right now, about 1727. So I'd be watching for a shorter-term reversal pattern in that. The VIX is going into full-blown no-fear mode again. Yesterday was the lowest close since 21st of September. Okay? Again, this is over a month of sort of elevated VIX wiped out with yesterday's close. Now, again, I'll be watching getting oversold with cycles getting to bottom, so I'll be watching for at least a pause/pullback. But unless we really start rocketing with the VIX, and I'm watching 16 roughly on a closing basis for the VIX. The DAX, which would have had to have been traded, it closed yesterday in the double pattern and virtually completed it today, but that would have had to have been traded intraday on a break and then carried forth. Now going to watch where it closes in relation to 15,302. But same thoughts in this. Everything's trading in lockstep. Overbought cycles at the top. Here we go with the notes. The note futures, party on. So, again, we finished the double. We finished the double into the weekly rotation zone. So anywhere in here, I'm watching for a more significant rollover play. On a continued rally into next week, 109.14 would be 109.14 to 109.22 would be a key resistance area for me. Other than that, support now coming in on the short-term basis at 108.03. You're welcome. Not you research that, especially go back a few years. It's changed slightly, but that pattern could kick in again at some point in the future. That buy at the close, sell near the open, or the other strategy was not just sell at the U.S. Open, but sell at the European close. So buy at the U.S. close, sell at the European close. So you're timing the sale of the U.S. futures based off the European closing time. That's something else everybody might want to research who likes to do research. The 10-year continues to drop. This is going to get overdone, but finally back into the rotation zone. Going to be focused on about this 440 on a closing basis. But anywhere in here we could find some support between the 50 and the 62.5. The 10-2s. Continuing now, the bear steepening has been put on hold in the short term, continuing the pullback. Is this going to, are we going to plummet back down? No, we're probably going to find some support in here after this overreaction gets shut down. Now, dollar index breaking down. So I'm going to be focused on this 104.26, 104.25 area. Let me jump to the euro real quick, because why am I jumping to the euro? The euro has officially hit the first stop. So the first stop raise area, not the first stop. So the farthest away thing that invalidates the pattern now is 105.50 on a closing basis, or 105.16 on a trade through basis. That's the farthest thing away. Would I even personally give it that much room? No. I give it a little room because we've had a lot of volatility. It all depends on the way you're looking at stuff with this, but also getting to the upper end of the channel. Now, the next targets are 107.48, 107.78. Just to recap, in case you missed it yesterday, the pound, which has moved back up, which technically invalidated the mini double pattern in here. But the next key levels for the pound, then I'll get back to crude and everything else. The next key levels for the pound are, this is significant level area, about 123.77, then 124.12 to about 124.35. All right, crude was stronger earlier, now trying to roll over. I'm going to be watching to see if we form a bottoming pattern down here somewhere, but nothing yet from my perspective. Crude is in sit on hands mode. Sit on hold. Natty gas could potentially invalidate the double. We'll have to see how this day closes. Gold, watching for a potential head and shoulders. This other double has been invalidated with the push up, but still watching now for a head and shoulders pattern to see if that forms. Other than that, not much. What's interesting is gold had a stronger push up. It's waning a little, which we might be getting some profit taking now in a number of things. S&P and NASDAQ starting to pull back slightly. Going to keep an eye on this. Is this a major, and this is still premature, but let's just give you an example. Let's just say we formed a shoulder in gold and came back down to break out of there. I don't even know where it would be yet. I mean, look, that's not a huge pullback. You're still not in a huge pullback if you look at it in terms of the weekly. And this might never trigger. So I'm going to take it back off. It might never form. I shouldn't say might not ever trigger. The spiders. After hitting the 75 yesterday and the 50, the next key area, let me pull off these for the short term because we're in a short-term bull mode trying to clean up the charts. The next key area is 434.50. We're trading 433.23 on any rollover play. I'd be watching for the gap fill to yesterday's close, 430.76, or at least using the partial gap fill with gap harmonics for the people who know what I'm talking about. Beyond there isn't a lot of support until back to 426.60, and then there's still a gap left behind. So this is gapping. Again, I would be just focused on short-term price action after the open, and then on any rollover to the yesterday's gap fill close, and to the upside, the 434.50. On the Qs, next key target 365.90. We're trading 364.54 on any rollover play would be for the gap fill 363.44 to 363.68, which is yesterday's high. I'd use a zone. Then the next key support beyond that is 361.50 area. Okay, so the same thoughts hold true, getting to overbought, getting a cycle top. So I'm going to be watching for at least a pause move going into next week. Also, there's a weekly potential double bottom in XRT. Retail ETF for November is historically strong for retail. Walmart is best month. Yes, it is the best month for Walmart of the year. Trading higher 72% of the time since 1972. Very good advice, Sterling, in this. XRT, because of holiday sales, is potentially a stronger month. So the trigger point on a weekly would be out there. Now this could rally up and not ever trigger, so keep that in mind. But that is, Walmart is a very strong stock traditionally in November, and it's already had a substantial run up. Now what's interesting with Walmart on the weekly basis is if something, I'm not saying this is going to trigger, but this is already at a run up. If you are looking for the next targets higher in Walmart, I would use your reverse harmonics for the short term. 167.62 is what personally I would utilize as a stop raise, and 169.40 for another target. If you're really bullish, it could be a target slash stop raise or a potential profit taking target. You do have some room still the upside on cycles on the weekly. But I'd be watching. If this pattern does not get invalidated, it could be a massive weekly double top. Chris, for you, we can check Apple. We can check Apple. Apple, I'm expecting, unless the market rolls over substantially, at least a partial gap fill today, trading, and this was holding up after hours pretty well yesterday, but started getting sold more so early this morning. Key support is 174. I'd be looking at that, which is the gap fill is to 173.97, to the gap fill between the first and the second. So that's the first key area I'd be watching for support. So it came up here in the 50% harmonic. Bad earnings. Well, they technically beat, but these, if you look behind the scenes, were not good numbers for Apple. What would I be looking at for support in here? Support below 134, roughly 174, 173.24, and 175 on a bigger pullback. On any rally, you still have the pattern of lower highs and lower lows, but on any rally from where it's going to open, I'd focus on the gap up price from yesterday, which would be yesterday's open, 175.52. And then beyond gap harmonics, it would be to 177.83. And the next key area is 181 to the upside. I think even after a pause, if this, I'd be watching for a shorter term pullback pattern, because a lot of people still rush into Apple potentially in this month from a retail perspective. You're welcome, Jake. What else do we have? We have Tesla. Tesla, no, this is not a double bottom. Still the key resistance 225. Hitting now, retested 200 from the downside, looking to gap up a bit, but 225. Then there's a gap behind, but the next minor target I'd use above 225 is 230.61. There we go into the open. Let's just check stuff to see. Got to check it before we wreck it. Check it before you wreck it. So, no, yeah, it's technically a potential double right there. It could get wiped out. I'd be watching, though, for a breakdown below about 43.50, 43.50, 43.51. The tick strong, very strong opening tick. But I'd be watching to where this finds support. Okay? Where this finds support. How much it pulls back. So, I mean, if it can't really start dropping on the 5-minute closing basis back below zero, I would not be looking for the top. But if we start rolling over and getting weaker into the European closing section, I'd start watching for some profit taking. Now, this is slightly better pattern. This is better. You might have a little mini 15-minute. But it would need a 15-minute close below this low. Below this low. So I'd be watching 15.1850. All right. Let's just check the NASDAQ too. Oh, that was the NASDAQ. Sorry. Here's the S&P. Nothing yet there. The key level on the S&P is 43.52. But still holding up with the, let's double check the tick one more time. I'd be really, all right, so it's tick, not a massive plummet yet. I'd be watching how it reacts into the 600 range. With that, I shall talk to everyone later. Let's just see how gold's looking. Okay, gold's still pausing. Gold's still pausing. I shall talk to everyone later. Everyone have a wonderful, wonderful trading day and a fantastic weekend. I will see you all on Monday. Bye for now.